Welcome back to the Commstock channel. It is Friday, so you know what that means, the weekly wrap-up. My name is Breann Hendrickson, and I have Eric with us to go over this. As always, welcome.
Yeah, thanks, Breann. Kind of a different vibe here this week with the USDA report and major rainfall totals across significant portions of the belt. So a little different feel. Basis is strong. General outlook for grains is pretty good, other than we keep struggling with the idea of lacking exports. So kind of have stories on both sides, but it's been kind of an interesting week, and maybe we've broke your little curse that you had this week. So we can get into that here in a minute.
I hope so. For everybody's sake, I hope so. But let's start, before we go to the soybean curse and talk about that, let's start with corn.
Yeah, so corn had a really good day on Thursday following the report, but I think it was just kind of in tow with the beans. I mean, beans were up at times 45 plus cents following the report, finished the day in the 30s higher. That was significant. I mean, that took us off of lows to a point where we can feel confident that maybe that was the harvest low that we saw down there at 1250, and maybe we can actually move up out of here. Biggest thing with the corn is going to be the exports. That's the biggest thing that the bears are hanging their hat on. This week, we saw actually really good weekly export sales, above the top end of the range of estimates, which is fantastic. We also saw some daily flash sales, and we saw some interest from Guatemala and Mexico and China, all in the corn market just this week on the daily flash sales. But China's buying is lacking, and I've put up a chart here that we can kind of get a visual of what I'm talking about. So back, going back for a long time, but those of us that have been around for a while know that China wasn't always a big buyer of U.S. corn, and it wasn't until we started imposing these trade sanctions and the idea that we're going to stop business with China, so you need to buy more of our commodities and more of our exportable goods and make right on this situation, because it was so lopsided. A lot of that initiated during the Trump administration. So you can see on this from 2019, you start to see an increase into 2020, and then it just really accelerates in 21 and stays at that level through 22. So the big looming thing here, the black cloud, is, are we going to go back to pre-2020 purchasing levels from China, or are we going to stay at these elevated levels? And I think we've gotten a little spoiled over the last couple of years. Hopefully we can stay at somewhere in the middle. I don't think we're going to stay at the levels we've seen for the past year or so, but if we could meet in the middle somewhere, that would be really good, and that would be a win for our market, especially with increased ethanol demand domestically. So that's going to be the big deal moving forward. Can we resume those level of sales with China, or are they going to source most of that from Brazil, and we're just going to lose out on a lot of this business? So that's the big question mark moving forward. That is what the bears are hanging their hat on, and we just have to see how it plays out over time. Like I said, we did have the daily flash sales this week. We had a good report. We had good weekly sales, but through all of that, we could not break above $5 in the December corn. We got to $4.99 3/4, but we could not get above $5. We could not close there. And so the chart outlook is not great. So corn still has a lot of proving to do. And right now it just doesn't look as good as it maybe should, if we're going to have much hope.
All right, now I'm going to insert the drum roll.
Yeah.
We're going to switch to soybean.
Yeah. So finally, for the first time in your stint with the Commstock channel, we have positive trade in the soybeans for the week. November soybeans finished the week 14.25 higher at 12.80 1/4. We did trade in the soybeans to 12.99 3/4. We have a similar, almost identical situation, just a different number in the soybeans. November soybeans need a close. Actually, we need consecutive closes above $13 in that November contract to really prove something. We couldn't get there. We couldn't get above 13. Obviously, if you can't get there, you can't close there. Harvest is on hold right now, both corn and soybeans through a big chunk of the belt. I'm talking about North Dakota, South Dakota, Nebraska, southern half of Minnesota, a big chunk of Illinois. All of this because of the rainfall totals that we've seen in the last 48 hours. But I did put together a map of the last 72-hour rainfall totals. So when you look at that, you can see the epicenter. Well, really, there's two, but right over that South Dakota Nebraska border is a big one, and then over the Minnesota Iowa border was a big one. And here in Royal, Iowa, we had just shy of 4 inches of rain, and you don't have to go very far, and you found some 2.5, 3 inch totals, and you also don't have to go very far, and you find 5 inch totals. So there's some big soaking rains falling right when farmers need to be out in the field working. And of course, that's not happening. So we'll see how long that delays things. It is interesting, though. It has kind of perked up basis. If we could shift some of this rainfall off to the east a little bit, we might get some upper Mississippi River Valley rainfall that could help the river levels, which would further help basis. So that's going to be a big deal. I did notice today that even though the market was down a little bit, basis more than compensated for it locally. And so the cash price is still pretty stout. Soybeans were carried mostly this week by the report. However, there was another underlying factor with crude oil being up really well from lows posted early week. We saw some nice moves there that carried the bean oil higher. That spread is attractive to those looking to play the energy market, especially on the biodiesel front. And so that bean oil strength, it weighed in for sure. It helped the beans out, but we got to get above 13 or we haven't proven anything.
Let's switch to livestock.
Yeah.
Let's go cattle first.
So cattle market had a, let's say it's spook traders midweek. We had two big down days, and the cash recovered and really offset that. You saw on Wednesday, you had a pretty significant amount of cash cattle trade in Kansas and Texas, which is abnormal, especially on a Wednesday. A lot of times you'll see some bigger numbers on Friday when people are losing patience and the packers got to get something bought. But we saw over 9,000 head move in Texas. That's unheard of recently for a Wednesday, at $1 higher than the previous week. We saw a little bit more cash movement on Thursday in both Kansas and Texas at $2 higher than the previous week. So you're making these $1.50, call it, gains in the Southern Plains. At the same time, you're seeing dress trade in Iowa and Nebraska $3 higher than the previous week, while live trade is about $2 higher than the previous week. So we're going to have a weighted average between live and dress trade that's somewhere around $2 higher than the prior week. And that could stop the correction that we've been in here for a couple of weeks. So never say never, but we may have seen that correction already run its course, and we'll have to see what the first of the week looks like before we know. But October cattle finished the week $2.05 higher at 185.12. And I have a chart showing the weekly continuation on live cattle that I want to put up for those who've been spooked by what we've seen here recently. And when you look at that weekly continuation chart, you can see this is a year that you're looking at here, a full calendar year. And it has just been astounding at how strong that market is. They don't get much more perfect. You go bottom left corner to top right corner on a 45-degree angle, and there's just not a lot of variance there. It's just beautiful. The market's still strong. The fundamentals are still there. We will see more corrections along the way. I believe that we may have seen the high, especially in some of these deferred live cattle contracts, but we're a ways off of those highs. So we could continue to climb here without having a significant breakout. So I think we're going to see a strong market, but maybe we've seen the highs already. We did have lower trade today, but the cash carried, cash is king. That'll dictate what we do to start next week. We did have really poor export sales on the weekly numbers in both beef and pork, but talking about beef specifically, we were 29% below the 4-week average. Not good, especially when you have struggling box beef prices. So that tells me the box beef's probably still overpriced a bit, but it'll take time to sort that out and find out for sure.
Let's wrap it up with hogs. How did they close out today, and how did their week go?
So hogs were just kind of narrowly mixed today. It wasn't a big trading day in the hogs today. The week, it's kind of funny. Of course, we've got to focus on the October because that is your spot month. And for the week, October was only down 40 cents at 81.92. But you go one contract out to December, and it was down $4 at 69.50. So you've got some of these deferred contracts really struggling, and December running a $12 deficit to the October. I gotta think once we get this October out of the way, which today's the last trading day, so October's gone as of this moment. So now with October out of the way, maybe December can actually make a move and try to close that gap on the continuation chart. I'm not saying it's going to go $12 higher next week, but maybe it can make a move and make an attempt to get up in there. So all in all, it wasn't a good week for hog futures, even though the October doesn't necessarily really reflect that. But even those deferred contracts did stay above critical support levels. So that's a good thing. We had every opportunity to get down that low and couldn't. So that's good. Cash trade, just a roller coaster. Weekly export sales, as I alluded to earlier, were just awful, down 32% from the 4-week average. And I have to think some of this is China coming off of a holiday and they haven't really regrouped to buy. So maybe we'll see some excitable buying next week from China, and maybe we make up some of these losses that we suffered this week. As of right now, it's just going to be a waiting game.
Overall, how do you think the week went?
I thought it was pretty good. I would have much rather seen corn and soybeans finish today on Friday above $5 and $13 respectively. That would have been just fantastic. But the feel is a little better. I think you're starting to see a little bit of short covering. I think people are looking, okay, now the reality is we're within a day's shot of clearing these resistance levels. So they're not overly willing to fight the trend here, which short term is turning. And it would appear that the 460s in corn and the 1250s in beans were our harvest lows. And so here we are mid-October. This is a time frame where you can see a trend change. I think we can expect to see something. But again, got to clear the first hurdle.
All right, that'll do it for this week. Thanks so much.
All right, Breann, thanks.
For premium content, you can head over to the Commstock Report. Don't forget, hit that subscribe button.